So today I have the best episode, I think, yet. I talk with Donna, the CPA, about everything that you need to know as a professional organizer getting started. And the questions that I spent the time asking her came from you. They came from you in the Facebook group. They came from my student-only Facebook group and the membership. And speaking of the membership, if you are not a part of our monthly group coaching membership, you are missing out. I would have killed to have this opportunity when I was getting started to meet with other professional organizers and with a coach who has been there, done that, and could help me out. I also have my 8-week one-on-one coaching sessions to offer you. If that is something you are interested in, you could also do a one-time 1-hour unstuck session. So the 1-hour one-on-one unstuck session is $97 for 1 hour of just me and you. Or you could get 8 sessions for $697 as a one-time payment, or as 2 monthly payments of, I think, $367 a piece. So it's completely up to you. I understand right now, if you're starting your business, this is also a business write-off because it is coaching. And I just wanted you to know the options that were available to you. It is expensive to do one-on-one coaching, which is why I could never afford it when I was getting started, except a few times. So that is also why the monthly membership is there. You get group coaching. You get to watch all of the replays. A lot of your questions can be answered. You also get your specific questions answered because sometimes there's only 1 or 2 other people in the group coaching session right now, but we are growing. Just this week, we got 3 new members. And so if that is something you are thinking about or that you are interested in, it is $47 a month, which you could do. That's like, what, $12 a week or something. When you look at it that way, I promise you it is so worth being able to come to group coaching sessions, to watch the live workshop and get your questions answered, all of the things. And I am so available for my members anytime that they need about anything. So please, if you have been thinking about it and praying about it, please go over and join our monthly membership, because right now there's not a ton of women in it. I think we're up to 14, but it is growing. And so before long, we may have to switch it up a little bit. But right now, I am in there. I am active. The girls are in there. They are active. They are learning to support one another. They are rocking it. I am so proud of the women that are inside of the membership. So again, go to proorganizers.community to sign up, or reach out to me for your free consultation, and we can figure out which way is the best way for you to work with me, whether it is through the monthly membership or through the one-on-one coaching. All of the links will be in the show notes below, and you can go to proorganizerscoach.com to find everything we have been talking about. I hope this episode blesses you. And again, Donna, the CPA, is fantastic. She's at DONNA'S.com. Go support her. Go check her out. If you're needing help with your taxes, set up her 90-minute discovery call. You will not be disappointed. So I hope you enjoy this episode. So let's get it. You are listening to the Pro Organizers Coach podcast. I'm Samantha Brown, a professional organizer and business coach. In this podcast, you will learn how to start and scale the organizing business of your dreams. So let's jump in. Welcome back to the Pro Organizers Coach podcast. So on today's episode, I have Donna Edge, CPA. Donna guides women-owned startups through the ups and downs of starting and running a successful business. Donna helps you create a firm foundation for your business, which, if you have been listening to me for any length of time, you know I constantly talk about. You need to build your foundation. Your foundation is so important before you start scaling upwards. And she also provides entrepreneurs with the resources they need to start, run, and grow a successful business. Thank you, Donna, for being a part of the podcast.
Thank you for having me.
So we've been talking about this, and I had polled everyone in the Facebook group and the women in my membership what questions they had that they would want to ask you. And so I'm going to get to those in just a few minutes. But first, I had a few that I wanted to start with. So first, I would love to chat about overall good practices when it comes to starting your business at the very beginning, when it comes to banking and getting paid as a service provider.
A very good question and good information to know. Whenever you're setting up a business, one of the biggest, most common mistakes we see business owners do is mingle their personal and their business expenses and income together in one bank account. And that's a huge no-no with the IRS. So you'll definitely want to get out there and open a separate bank account for your business to run everything through. A common question, of course, people have before they do that is what kind of structure they want to be and how they want to be set up. So you really kind of get that settled, and we're going to talk about that a little bit later in the show. But yeah, you definitely want to separate your personal and your business expenses and income into a separate bank account, and it makes it a lot easier when it's the end of the year for running and accounting for everything, especially at tax time. As far as paying yourself, that really goes back to what kind of structure you're going to be, tax-wise. So again, we're going to get into that a little bit later, because there's so many different ways you can set yourself up, and it all kind of depends on several moving parts. So I'll kind of elaborate that on a little bit later.
Perfect. Okay. And then when it comes to like Venmo, Square, like the actual places or the things that we use to get ourselves paid, like the way that the people pay us, it's super important to make sure we have a business one separate from each one of our personal ones, no matter what app it is, correct?
Correct. Yes. You definitely want to keep those separate, have separate ones for your business and separate for personal, especially nowadays because the IRS is really cracking down on those payments. And if you start trying to do it out of a personal account, and then you do personal transactions in that personal account, they're going to try to tax you on that because they're going to issue a 1099. So yeah, it's even more important now to keep that separated, especially moving forward.
Yeah. And just making sure, because I just, recently went through all this again with starting my second business, and just making sure that everything links, if it's Venmo or if it's Square, if it's PayPal, that specific one links only to the business banking account. Exactly. Not the personal ones. Exactly. So it's 100%, like there's a, what do they call it? Like a Chinese wall or whatever, like where, everything
a solid
is
line.
Yes.
Yeah. Firewall. You want to call it a
yes.
Firewall would be a good way.
Absolutely. Okay. So real quick, I wanted to get into specifically as professional organizers. We use a lot of products in the homes of our clients. And what are your kind of recommendations overall, which of course we know each state is different, but we have a few ways that a few different organizers kind of set this up. Some, kind of are kind of wondering and thinking like, oh, well, if I go and buy products for a client, then would I, just charge like a 10% extra before I then resell the products? Or do I charge a shopping fee for the time it took me, but then I just resell it at the exact same price that I bought it at? What are your thoughts on that? I prefer to just send my clients a link, whether it's Amazon or something like that, so they purchase the products and they show up to their home before our next session. So kind of what are your thoughts on all of those things?
So exactly what you just said. There's so many moving parts with this as well. And it's a state decision. It doesn't have to do with really necessarily with the IRS. It's more of a state distinction. And I love your solution of getting around all this with, just sending the customer the link to Amazon or whatever store they're wanting the products from and have them order them, because it can get really sticky. Because technically when you have an item and you buy that item as a business owner and then you pass it on to a client, whether you mark it up or not, the state will see that as a sale. And as a result, you're going to have to get a sales tax ID and start tracking sales tax. And that can get kind of complicated, and each state's different. And so that's why one of the things I always encourage startups is to reach out to professionals in your state to get the guidance that you need, because everybody jokes about how hard the IRS is on people. The states can be worse, if you can believe that or not. You don't want to mess with the state. They will show up at your door. I don't want to scare you, but at the same time, sales tax is a pretty serious money-making situation with the states, and they don't mess around with it. So it can get really complicated when it comes to sales tax. And so, if you do the method you're using, you avoid all that, and it's perfect. So I would definitely encourage trying to find a way to do it that way if you don't want to have to deal with sales tax. Otherwise, I would play it safe and get your sales tax ID and just mark it up. Because if you ever do get audited.
Yeah. And making sure that we are keeping it 100% above board. Everything is right. But again, like you said, once you start going down that route of messing with sales tax, then you definitely need a professional from your state that is helping you figure out exactly how to set it up. Because if not, you don't ever want to be the one that someone's knocking on your door. Especially
Exactly.
over sales
Exactly.
tax.
Right. If you have different municipalities that you're working in, then especially if you're in a big city and you work in different areas around the city and they have different tax rates, then you have to keep up with what tax rate to charge them. And it may be different from this person than the other person. So that makes it
Yeah,
more complicated.
and honestly, I've been dealing with this with the online stuff, right? Because some states are based on where people are. The tax that you're supposed to charge. Some digital products are considered like you don't have to tax them. Some you do have to tax based on
Yep.
how you recorded it. And then on top of that, based on where the person's located that actually bought the product, now how much taxes, just all of the things. And so it really can become very stressful. And
Very.
especially when you are first starting out, I try to teach and coach like as simple as possible. Like let's get our foundation built, but let's keep it as simple as possible until you get the hang of these other things. And then if you want to start adding services or adding additional things that you do, once you find out all of the information about it and want to do it correctly, then by all means go that route. But at first, let's get, let's go the easiest way we possibly can just for your own sanity. And so you don't end up getting burnt out 3 months in and don't even want to do this anymore.
Exactly. Very wise words.
Thanks.
Sound like you've been around the block a few times.
Just a few. Yeah. Okay. So a few of the girls asked, Trista had asked, what is the difference between DBA, sole proprietor, and LLC?
Very good question. So generally when people start out with a business, they'll just use their personal name and then they'll get a DBA with the county. And that way they can say, I'm Donna at DBA Professional Organization Services and put themselves out there under that DBA name without having to use their personal name. And that's very simple. You file what's called a Schedule C on your tax return, your 1040 tax return. And so it's no separate tax return. It's just all flows through your income and expenses to go on a Schedule C. If you do an LLC, and it depends on, this is going to vary across the different states, but generally speaking, when you form an LLC, you form it with the state that you're in. It's not an IRS. You don't go to the IRS and create your LLC. You go with your state, your Secretary of State, and you create the LLC. If you're the only owner of the LLC, by default, the IRS will tax you just like a DBA. So there's no difference in how much tax you pay, no difference in how you handle your books. Nothing changes. It's just you're an LLC. And I'm not an attorney, but this is just like a generalization about LLCs do give you an extra layer of protection. And then it also makes you look a little more professional. You hear that a lot because you're like Professional Organization Services, LLC, and makes you look like this, big company kind of thing. So some people like the way that looks, but the big thing is with an LLC, it gives you that some liability protection. But tax-wise, everything's handled the same way. You still file on a Schedule C. But with an LLC, if there's two of you that own the business together, then by default, the IRS taxes you as a partnership. So you would have to actually file a separate tax return. It's called a partnership tax return. And then you also have the option to be treated to be taxed as an S corporation. So there's benefits to all of them. And that's again where you need to meet with somebody professionally one-on-one and see what's specific to your situation. But those are the different options that you have. So it's a very common question that I come across. And I do a lot of counseling with clients about that because there's strategy involved in using those different designations or different choices of entity. But the nice thing is, I will say, I personally, when I meet with a startup, if they plan on definitely growing the business, we'll go straight in and form an LLC. If they're the only owner, we'll just go ahead and create the LLC and get that done. Because when you get an LLC, you do have to get a separate identification number for the LLC. And it's called an EIN number, Employer Identification Number. And you get that with the IRS. So that's how they identify your business. So I generally tell people to go ahead and do the LLC if they're the only owner and don't even do a DBA. It's just the easier step. That way down the road, if you decide you want to, there's a point where you're going to be ready to be taxed as an S corporation, then you don't have to do anything except file a form with the IRS. You don't have to change your name. You won't have to change your bank account or any of that. So because if you're a DBA, and then decide later, oh, I want to be an LLC, you got to start all over with bank accounts and everything and update all your Venmo and all that with your new employer identification number and everything. Because as a DBA, you're using your social security number as your identification number.
Oh, so I actually may have done this wrong. So I did sole proprietorship, but I went ahead and got my EIN.
And that's okay. The only time you need an EIN as a sole proprietor is when you actually have employees that you're hiring and paying payroll and taking out payroll taxes.
So like whenever you're going on like Venmo or these places and they're asking for your EIN, if you are a sole proprietorship, you can just use your social security number.
Right. Because that's what they got to report it to. Yes.
Okay.
Report it. Yep.
Yeah. So that's where I got a little turned around, because when I was first starting my business, which of course I had no guidance, so I was just doing it the best I could with what I had. So how hard would it be with me already having an EIN to change it from sole proprietor to LLC if I need to do that at some point?
You would basically be starting over. You wouldn't be able to use that EIN number. So what would happen is you would go form your LLC and then go on apply for the EIN number linked to that LLC. Then you'd have to go to the bank, take all the paperwork from the LLC formation and the EIN and go to the bank and open a new bank account. And then you'd have to update your Venmo and PayPal and all the other forms of services that you use to collect payment. You'd have to update them with your new information, your new legal name, your new EIN.
Okay.
So that's why I tell people when they're starting out, you might as well just go right on into an LLC. In Texas, it's $300 to form an LLC. If you do it yourself, of course, if you have somebody else do it, this is an additional, they're going to charge you for their time.
Yeah.
But it's still worth it because, again, you don't have to go through that restarting and rebranding, because now when you have an LLC, you've got to put yourself out there as the LLC business. And your branding and everything needs to have that in there. So
yeah, because I don't plan on doing that with my organizing business. Like that's just, just me. I'm just going to keep it that way. But I was just thinking for everything I'm doing online, at some point, if I need to start hiring people, but a lot of the people that I am hiring, they actually have their own business, like their own VA or their own whatever. So they're technically just subcontractors, correct?
Right.
And so it's okay to still be a sole proprietor because I'm just paying them as a service.
Right.
Okay.
Because they're
perfect.
independent contractors. Yep.
Yeah. And that was actually the next part of the question that Trista had, was also, when do you have to 1099 a subcontractor? Is it any time that they do work for you or after a certain dollar amount? It's
after a certain dollar amount. And this has gotten really crazy recently because of some of the new guidelines that have come down. But basically, it's if you pay somebody during the year $600 or more through checking, using an actual physical check, or like through Zelle or cash, like pay them cash, you need to issue them a 1099. If you're using like a third party, and there's some gray area in this right now because they've talked about, requiring like Venmo and all them to issue the 1099K, which is all the payments that they've made on your behalf or received on your behalf from your customers.
Mm-hmm.
And so you're coming across people issuing, let's say, if you pay somebody $5,000 and you use a debit card to pay them, well, you technically don't have to issue a 1099 because the debit card company, whoever processes the stuff, is going to be issuing them a 1099K. But they weren't technically going to didn't start doing that until it was like $20,000, but they were supposed to drop it down to 600. And then at the last minute, they changed it back to the 20,000 at the end of last year. So it's kind of crazy because people are scared because, like, what if I don't issue a 1099 when I'm supposed to and I get in trouble? But yet at the same time, they're double issuing. The people are getting reported double income, and you have to tie all that to your report, what you report to the IRS. So I've been telling my clients, if you pay them by cash and by Zelle, or by check, then go ahead and be prepared to issue a 1099 if you pay them more than $600 or more. That's kind of like the simple way of explaining it.
Yeah.
And again, that's another reason it's so important nowadays to have a tax professional on your team because of this kind of stuff. It's just getting crazy.
Well, and my advice too, because, and I may have talked about this, I'm not sure yet on an episode or not, but I just filed my taxes like last week because it was for, it was the first year I was doing it for both businesses, and it was just a whole thing. And it really was a lot more in my head than what I thought it was going to be. And so I kept kind of putting it off and stressing out and, just all the things. But the other issue I ran into was every single person, like I kept looking, like the first person I talked to, they gave me one answer. The next person gave me another answer for the same question. The next person gave me another answer, and they were all like in my county. And I'm like, hold on, shouldn't the answer be the same no matter who I'm asking? And so I kept looking and praying. I was like, all right, God, you've got to send me somebody that like legit can help me and wants to take the time to just sit down and have a conversation with me. And that it literally was the fourth person that I interviewed. I even had an appointment with a separate person, but there in my gut, there was just something that was like, this just, it didn't fit right. And so I kept looking until I found that person that when I sat down with him, he took the time to answer my questions. He explained everything. He was, and that would be my advice is don't just go with that very first person. Make sure it's someone that aligns with who you are and is willing to go above and beyond to have at least a conversation with you. Because if not, then you're still not going to understand what you're doing. And you have to understand what's going on in your own business to keep running it and to keep running it correctly.
Exactly. Again, very wise words, because I was going to tell you that you can give a tax return to 10 different people to prepare it, you're going to get 10 different results. Because there is so much gray when it comes to taxes, and you've got to be with somebody that you're comfortable with. I owned a traditional brick and mortar CPA firm for 12 years and sold it. And one of the things that people came to me for, because we grew so quickly, was because I do take the time to explain things. It's so important. And that's why I'm on this other journey now of being a coach for small businesses. Because I can't not help people better understand this kind of stuff.
Yeah.
And it's so important. Like you said, it's the foundation of your business. People think of marketing and sales as everything you need to know about owning a business. That's important, but it's so much more. And that's why I'm just so passionate about getting out there and educating business owners about this and what they need to do. And you do need to have a professional on your side that you are comfortable with. And like you said, that's going to listen to you and take the time. And you'll know, I mean, in interviewing, don't be afraid to meet with several of them. And there's a shortage, unfortunately, of professionals out there, CPAs, right now. And a lot of the CPAs are going for bigger fish, so to speak. And that's again why I want to educate people so that they can have those informed conversations with the professional when they're interviewing them and when they're needing that help, and they have an idea of what these people are talking to them about, and they say, oh, okay, yeah, I kind of get that. Thank you for elaborating. So yeah, don't be afraid to interview. And I think we're going to talk a little bit later about some questions to ask when you interview for a CPA. So we'll go into that a little more detail later. But yeah, you are going to get different answers from different people.
Yeah. And that's just how it is. And I thought that was the craziest thing, but it seems like it's actually more normal than not. So just know. And actually the question that I had asked that I got so many different responses on, the guy I ended up going with, he actually explained to me why I got all of those different answers. And I was like, thank you. Like literally that took 2 minutes for someone to just explain to me. And actually one of the questions the question that I kept asking these different tax professionals and getting different answers for is actually one of the questions I have for you later. So with that being said, so Gina had was wondering if we could go a little bit more into, which you've kind of already covered, but what to form your business under, the LLC, Corp, etc., based on your goals. Do you have any more and I think what she's asking is because some people go into this wanting to just be just themselves. And then some people go into this wanting to run a team and wanting to have subcontractors and handyman and painters. And, they have these very big aspirations of wanting to run like a very big team. So we already know that if it's just us, you still would recommend an LLC. But what if someone was going into this wanting to run a team and that was their big goal? What would you recommend?
An LLC still works great for that. Again, it's really about the tax side of it and saving on taxes. So there is a point where, so I'll kind of take a second and explain the taxes, if you don't mind. When you file as a DBA, sole proprietor, or single member LLC, and it's all those are encompassed on that Schedule C with your 1040 tax return. At the top's the income, the bottom's the expenses, and then below that, If you have a positive number, you have a profit, and a negative, you have a loss. Well, that profit is how much you pay tax on. And we were going to talk a little bit about how you pay yourself when you pay yourself as a DBA, sole proprietor, single member LLC, you just take draws out of your business. You don't put yourself on payroll or anything. You just transfer money from your business to your personal, however much. And there are some limits, but you just transfer how much you're paying yourself. Those transfers do not reduce that profit in the business. They're not deductible expense of the company. So the IRS looks at that profit and says, that's your taxable income from your business, regardless of how much you take out of it. So what you may not realize is there's two buckets of taxes. You've got your federal income tax bucket, which is based on your tax rate, based on your overall income. And you've got different tax brackets. That's not going to change as far as what that comes out to be, regardless of how you're taxed, whether you're an S Corp, LLC, or whatever. But what does change is the second bucket of taxes, and that's your self-employment tax. So your self-employment tax is that Social Security Medicare tax. When you work for somebody and they pay you as a W-2, they take out Social Security Medicare tax from your paycheck. Together at 7.65%. What you may not realize is that the employer has to match that 7.65%. So they're putting in 7.65% on top of your 7.65% towards your Social Security Medicare taxes for retirement later. Together, that makes 15.3%. When you work for yourself, you're the employee and the employer. So you're having to pay that 15.3% on your profit on top of your federal income tax. So that's where you're going to save money as far as if you down the road choosing to be taxed as an S corporation. When you're taxed as an S corporation, you file a completely separate tax return, and your profit is not subject to that 15.3%. However, you do have to pay yourself as a W-2 employee. You put yourself on the payroll, just like if you hire somebody else on payroll, you pay yourself a salary. The IRS calls it a reasonable salary, and they expect you to pay for it, and they collect the Social Security Medicare out of that. So what I like to give as an example, let's say you're filing on your Schedule C as a sole proprietor and you have $100,000 of profit. You're going to pay 15.3% of self-employment taxes on that, $15,300. As an S corporation, let's say you have $100,000 of profit and you pay yourself a $60,000 W-2 wage, you're only paying that 15.3% on the $60,000. The other $40,000 is not going to be subject to that 15.3%. So there's strategies in place and there's other things you can do. So that's why, again, it's just important having a professional that takes the time and explains that to you. And there's a point where it becomes beneficial for you to make that election to be taxed as an S corporation, and it's based on your profit. So there's some new things coming out. So, but right now I generally say around $50,000 of profit, you need to start looking at that option. So you can have that conversation with your CPA and say, I've heard about this if they haven't already told you. I'm getting near that $50,000 of profit. And that's another reason why it's good to be on top of your numbers and know where you're at throughout the year. And there's other rules in place too. But as far as like when you can make the election, and it probably varies by state as far as like the LLC, but as far as the IRS, you have a window to make the election each year. Because you don't want to do it at the beginning when you first set up, because you're going to pay too much money on the extra cost, and you're not going to get any benefit from it. So that 50,000 something, I ran the numbers to come up with the number, where it starts to become beneficial.
Yeah.
So that's a big part. And again, there's just I know I keep saying this, but taxes are so
yeah.
There's just so much involved.
Yeah. Well, and we appreciate you explaining it and being willing to explain it as best as you can. I mean, obviously you can't answer every single person's exact questions because it's so different, but just the overall, generalized answers are answers that we wouldn't get otherwise. So I'm definitely thankful that you've come on to help us with this. Now, one thing that was kind of coming up for me, and it's actually a question that was later on, but I think I'm going to go ahead and bring it up now. So little Miss Jessica, which is, I love her. She's awesome. But she had asked, and I know we said we'd go into this, so let's just go ahead and do it. But she said, what is a tax ID number? And do I need one if I'm a sole proprietor, which we've already answered? How do I get one? Which of course you went through that too. And her question was, how do I organize for taxes? Do I need to save money to pay taxes? And if so, what percentage? And this was the question that I kept asking all of the different people was, what percentage do I put back for taxes? Because my thinking was, okay, let's say I get, I work with a client, they pay me $100. So out of that $100, what percentage do I put into savings for taxes at the end of the year? And what percentage can I pull out to pay myself for that day? And so that was the different percentage answer I kept getting from everyone. And so I went high because I kept thinking, well, I'd rather have an extra little bonus for myself at the end of the year of like extra money left over as like surprise than to owe money and all of a sudden not have enough put back was my thinking.
Right.
And so the number that I ended up doing was 40%, but that was very hard throughout the year for every $100 to put 40 of it. And then on top of that, I was actually pulling money, like another 10% or so that I was kind of leaving in the account for like expenses and different things. So I was only making about half of what I was actually charging my clients throughout the year because I set it up that way. And so my new tax guy I got, he was like, that number is way too high for especially you just starting out and making, kind of as little as you did per se. And so, yeah. So what would you kind of recommend on that whenever people are starting and for that, kind of percentage number, just a guesstimate kind of thing?
Right. Yeah, that's actually one of the things I talk about when I do my 90-minute foundation consultation is how much do I need to set aside? I mean, that's such a common question. And that's it does depend. Because I give my clients two options. I'm like, okay, if you're not keeping up with your numbers during the year and you just want to look at, like you said, the gross that you get $100 from a client, that's the gross amount you get. I generally would say about 20 to 25%, because it's not factoring in any of your expenses associated with that job.
Mm-hmm.
So, and then if you're looking at your profit, you're actually keeping track of everything and you actually have a good idea what your profit is, then I say 30 to 35% because it's already factoring. Because remember, half of that is 15.3% for your Social Security and Medicare. Know you're going to owe that. And then if you look at your prior year tax return and you take the total tax liability, not your bounce due, but your actual, where it says on your page 2 of your 1040, your total tax, it tells you, and divide that by your total income, that gives you an estimate of what tax bracket you're in. So, and how much your effective tax rate is. So let's say you take that number and it comes out to be 15%, then you're going to owe 15% on any additional income that you make over last year's income. And then you're going to owe the 15.3% for Social Security and Medicare, and that gives you that 30%.
Yeah. Yeah. And that's kind of, and the guy actually helped me, or showed this to me. And what she's talking about when she's saying the different tax brackets is literally there's brackets of what percentage you pay, where if it's up to a certain amount of, for the year, then it's 10%, and then it jumps to 12%, and then it jumps, and it depends on how much money you bring in as to what percentage you are taxed on that bucket. But that other bucket of the 15.3% stays the same no matter what. Right. So it's whatever that other percentage is added to the 15.3 gives you the percentage that you should be putting back for taxes. And again, if at the end of the year, because you have kids or because of whatever, and your deductions or, whatever happens, all of a sudden, okay, you don't owe, you're actually maybe getting a few dollars back, or you owe less than what you've put back in savings. Well, then woohoo, go on a vacation. Yeah. Because you have extra money put back.
Yep.
Perfect. Kelsey had wanted to know, and I know we had talked about this, but tax write-offs. So specifically for your home office. And then she had also kind of asked, when it comes to organizing our stuff for our own offices, but even if we were to do like a photo opportunity with products and that kind of thing, how would that fall? Like, would that be considered something that we could deduct, or no, that has nothing to do with our business, even though it's something we would be doing a photo for marketing purposes?
So again, we mentioned, you're going to get different answers from different people. I'm more on the conservative side because I don't want to get my clients into trouble, obviously, but I've been doing this long enough that some of the gray areas I'm more comfortable with. And I just have an informed conversation with the client, and we discuss it and see what everybody's comfortable with. But so generally speaking, if you have a home office, it used to be that you would do like, say it's 200 square feet in a 2,000 square foot home, it's 10%. You would deduct 10% of your utilities, 10% of the internet and all that. And that would be your home office deduction. And then anything you bought specifically for your home office, like a new computer, some furniture, you would deduct 100%. So any of those decorations that you're using for the photography, for photos, and you're keeping them in your office to decorate your office, I would say would be okay taking 100%. Just don't go overboard. Don't buy something that you would not normally buy for that particular, for that you would normally use in your business. So just kind of keep that in mind. You don't want to have this huge expense, showing up and raising a red flag. So the other option that the IRS came out with a few years ago is called the safe harbor method, because the home office is one of those that tends to trigger audits. I'm not saying it does it all the time, but can be something that can raise a red flag. So the IRS provided a safe harbor where they said that they won't question it. They let you take $5 per square foot of the space that you're using for your office up to 300 square feet. And that's your deduction for your home office for the year. So I go a little above that and say deduct your internet 100% because everybody needs internet. You can't run a business today without internet. So I've always told my clients, I'm comfortable with you deducting 100% on the internet. On top of the safe harbor. So I generally go with the safe harbor with my clients, because if you start allocating a percentage and you apply it to part of your home and deduct part of that, then when you sell your home, you got some stuff that you got to factor in when you do that. And you might have some tax on that because you took depreciation on your home. So unless you have like a whole bunch of rooms that you're using for storing items that you sell, if that's the case, then I look at doing the percentage method. But otherwise, if you just got a small office up to 300 square feet, I just recommend the safe harbor method and just kind of stay out of the
percentages.
Trouble with the IRS.
Yeah. Which actually kind of goes into, so Angela had asked how to account for the supplies we purchase, then get reimbursed for if we don't upcharge, which we talked about that earlier. But specifically, she wanted to know, what do we call it? What type of expense is it if we were to then get a sales tax ID? So can you go into, if someone did choose to not go the like Amazon link route, like we talked about earlier, but they chose to, okay, it is worth it to me to buy products and sell and resell them to my clients, and I do want to get a sales tax ID. Can you talk about that just a little?
So if you buy a product and you're going to turn around and basically resell it to your customer, it's cost of goods sold. You create an account, you just track it as cost of goods sold. They're cost of the goods that you bought that you're selling. So that's how they come up with cost of goods sold. And what you would have to do is apply for your sales tax permit, and then you should be able to get a resale certificate from the state through the sales tax permit that allows you to go out and buy these items and not have to pay sales tax on them when you purchase them. So technically, an item should not be taxed for sales tax more than one time. So if you're going out, but then people try to say, oh, well, I'll just go out and buy the item and pay the sales tax on it and then turn around and resell it to the customer at an upcharge and not worry about it because I've already paid sales tax. The states don't like that either.
Okay.
So the way they want you to do it, the clean and cut, is use a resale certificate to not pay sales tax when you purchase the item, turn around, determine how much you're going to sell it to the customer, and add the sales tax and collect the sales tax from the customer, and then hand the sales tax back over to the state.
Okay. And then that sales tax ID, when you're keeping up with all of that, of course, with your tax professional, that then they collect that sales tax back from you that way.
Right. They use that sales tax ID to identify you in the state system. And generally it's due quarterly, the sales tax.
Oh, well, that's good to know. Okay.
Yeah.
So
I know our state does it. They set you up when you set up a sales tax. They set you up quarterly. Eventually, depending on how much your sales are, they'll change you to a monthly filer.
Okay.
And if it's really, really low, they might change you to an annual filer.
Right. Yeah. Yeah. Or like when you're first starting out, if you don't have a lot of, but yeah, absolutely. Okay. So 2 more questions and then we'll kind of wrap up. Gina had asked, what are some good questions to ask when you are interviewing an accountant, specifically as a service-based business or as a professional organizer?
There's different levels. You've got just tax preparers, and generally they don't have any licensing. If Then you have enrolled agents, which are licensed by the IRS. They don't work for the IRS by any means, but the IRS determines they create an exam and you have to pass it, and it has to do with taxes. And they don't have to have a certain degree or anything to become an enrolled agent, but they do have to pass the exam. And then you have the CPA, and that one obviously requires 5 years of college, and you have to pass the CPA exam and work for a year. Well, it may vary on states, but generally you have to work at least a year under somebody else to be able to actually retain the CPA license. So you'll want to, the higher that level, the more you're going to pay for the service, but it's kind of hand in hand. So you'll want somebody that's got at least a couple of years of experience doing taxes and working with small businesses. Confirm that they're going to be the ones actually signing the return. So just to, because sometimes you're getting a lot of firms, they're sending their stuff off to other countries to have it done, and then they bring it back. Yeah, it's become a big thing, outsourcing to India and the Philippines, the bigger firms. So that's
wow.
Yeah. So, I mean, it can be done right, so long as the CPA is looking over it and, and making sure everything's correct on it and everything, because they ultimately have to sign the return, the CPA.
Right.
So, another one is like finding somebody, a CPA that's in your niche, like somebody that works a lot with service-based, businesses, or even specifically professional organizers. Finding somebody that's really specific to your niche is always a bonus. It's harder to find these days, but you can always try. And of course, ask how many years they've been doing taxes, not necessarily having worked for themselves, but how long have they been doing taxes in general? Because some people have been doing taxes for 20 years, but they just started working for themselves 3 years ago, and that's fine because they still have 20 years of experience. The rate, always get a upfront quote on how much they're going to charge. So for like mine, I put out, I have a questionnaire I send, because everybody's tax return is different. Some people have no businesses, but they have a lot of rental properties, and some people have no rental properties and businesses. So just make sure you get an idea up front what they're going to charge you, so you don't have any surprises, because that's not fun. And depending on your preferences, are they cloud-based or paper-based? Is it somebody that'll work with you virtually? And do they have a secure portal? If you have a CPA that's sending you stuff, like asking you to send stuff over regular email, you don't want to use them, because cybersecurity is a big risk these days. And it just takes sending one email with your personal information on it to be, identity gets stolen. So definitely, if you're working with somebody that's cloud-based, just make sure they have a secure portal for you to use. Ask about what they do if you do get audited. Do they charge? Is that covered under the fee they charge you for your taxes each year, or is that going to be a separate cost? Generally, it's going to be a separate cost, because you don't know what's going to be involved with it. So if somebody says that they cover the audit, I would want to make sure you had that in writing somewhere. Also, ask them how do you handle it if there's an error on the tax return and the preparer, it was an error. You can show that you gave them the correct information and the preparer did it incorrectly. Will they take responsibility for it? And then there's going to be issues where nobody's at fault, and generally the CPA is going to charge extra to fix it. So just be prepared for that, and just ask them how they handle that. If there's an error on the return, ask them how they handle that. Do they charge an extra fee? Do they take, depending on the situation, be sure to just ask them about that. The turnaround time, how much time they expect it to take to get the return done. You'll probably get some varying answers on that.
And I have one to add while you are looking. So one I would add is also, what if I have a question, whether it's while we're in this process, or even after, like throughout the year? Do I need to hire you as someone because I got a couple different answers with that. I had one lady that said, okay, well, you pay me $150 quarterly, and then you kind of have me on retainer if you have any questions. And then I had another guy that was like, oh, if you have a question, which is, of course, the guy I went with because he was fantastic. He's like, just let me know, like send me an email or come into the office. I'll be happy to set and answer whatever questions you have. And so,
exactly.
So figuring out, because that could range, like, do I have to pay for that? Is that separate? Is it included? Is it not? And especially your first year or two running your business, you are going to have questions. And so making sure how that's covered when those questions do come up for you.
Yep. That was one of the things I had on here, because I know for ours, it's like we would say, if you have questions throughout the year, we're available. Send us an email. Most times they're going to be questions we know really, easy to answer. And then we will be upfront if it's something that's more involved, that we have to do research that's really specific to your situation or tax planning. We obviously will charge an extra fee, and we'll tell you upfront what that fee would be.
Yeah.
So you want somebody that's going to be honest with you about that. And that's great. I mean, I already like this guy that you're getting. I mean,
he is fantastic.
He's
and what's
awesome.
So crazy is I've literally been telling everybody that'll listen to me in this area, like, you have to go to him. You have to go to him, because I had such a good experience that now I'm like his number one fan.
Exactly. Yeah. And that was, I mean, you find a good CPA, the word's going to get out. And so hopefully he's got the staff to support it.
Yeah, no joke. And then if you, real quick, I actually fibbed just a minute ago, and I apologize for that. I said we only had 2 questions left, but now we only have 2 questions. One was how to keep track of expenses and income. I did want to go over that because I know that I promote QuickBooks, but you said that you had a few little like tips and tricks for that, or, the softwares that you use. So what would you suggest when it comes to keeping track of expenses and income?
I am definitely, you either love QuickBooks or you hate it. I'm a big fan of it because it's what I've always used, the QuickBooks Online. It's a great program, but they try to market it as for non-accountants, but it can be complicated, and it can get messed up. So what I generally recommend is, like, I met with somebody not too long ago, and they were stressing about having to pull all their income and expenses together for the year and all that. I said, go into your bank account, download all your transactions into an Excel spreadsheet, and then sort it by the payee. And then you have all your different payees, and you can group them, and you have your expenses, just assign them an expense category. And that's a lot easier than having to go in and use receipts and try to rebuild stuff. So I would just, if last year was your first year and you haven't compiled anything together, just go into your bank account and download your transactions, sort them by the payee, and then you can add a column and just assign an expense account. And they don't have to be real elaborate. If you go to my website, I provide a free sheet that lists all the different types of business deductions you can take. So you can use that as a guide if you want. But it doesn't have to be super complicated when you start now. And then eventually you'll get to a point where you're like, okay, I really want to be able to see my numbers regularly and know what I'm making. Then that's when you really want to use QuickBooks. And you can import things into QuickBooks to get it going. You can hire somebody to do it. So there's a lot of different ways to handle it. So, and then you have CPAs that'll do it.
And I'm actually in the process right now of creating like mini workshops. That way the people that come to me, like based on where they are, what questions they have, they can just do the mini workshop, with like the guide or whatever. And one of them that I'm working on currently is the QuickBook one, because I've wanted, like, for me, when I was first setting it up, it didn't make sense, and then even if I watched a video, okay, that's great, but it's not specifically for professional organizers. And, and so I'm in the process of making that mini workshop of how to use QuickBooks specifically as a professional organizer. And so I'm hoping that will be helpful for people too, because once you get the hang of QuickBooks, it's really super simple. It's just at first, it can seem very overwhelming.
Very.
Yeah,
definitely. And there's the behind the scenes of QuickBooks can get kind of complicated. Like, I generally tell clients not to use, there's two really neat features within QuickBooks where you can download the transactions from the bank every day. It just downloads into like a holding screen, and then you tell it where to go. Mm-hmm. And that's a huge feature. But I tell clients, if you're going to use that, don't use the invoicing feature in QuickBooks. Use something different. Because the invoicing feature in QuickBooks, where you send an invoice to a customer and they pay you through that invoice and it comes back into QuickBooks, it doesn't reconcile with when you're downloading it from the bank. You have to do some extra steps. So it creates double accounting of income. So that's like the big thing to watch out for when you're dealing with QuickBooks. So most people use a invoicing program that's specific to their industry. Like, if professional organizers have a special program that everybody uses for invoicing, then that's great. Don't integrate it with QuickBooks at all. Use that to track where your money's coming from different categories and stuff like that, as far as like who's paying you and what type of service. and then make sure, then QuickBooks will be your actual income statement to see how much income you got coming in and how many the expenses are going out. So
Yeah.
that's
So
one.
just no invoices with QuickBooks.
Yeah,
Because
it
that's so
just,
funny. I'm not, because I teach things a little different than most professional organizers do. I actually like don't invoice my clients because I just get paid on the day of for the services rendered that day.
there you go.
That way I never have this like, oh, well, so-and-so owes me $1,000 and this person owes me that, or, whatever. And that way the client's not having to pay me up front for work I've not even completed yet. They don't even know if I'm a good, if I'm,
Right.
who I am. And so for me, it's worked really well because then I don't even have to worry about invoices. I literally am just using QuickBooks. And I guess that's why it worked well for me, is because without knowing it, I wasn't using the invoices. I was just using it for doing the rules, and it worked perfectly fine. Yeah. So I appreciate that information. I'll make sure that's part of my thing I go into when I'm doing the QuickBooks. And then okay, so the downloads that you have available that were free are the it was the common expenses that are deductible, correct?
Yep.
Okay.
Yep.
And you have that on your on your website, which is DONNA'S.com.
Correct.
I'm so thankful to you. Like this has been so informative and so greatly appreciated, and definitely a conversation that needed to be had, in my opinion. And, just like we were saying about, the guy that I chose, like the fact that you're willing to even explain these things is amazing to me. And so I would love for you to tell people if they feel like you're an amazing person and they want to get to know you more, and the 90-minute thing you were talking about, like, can you tell us a little bit more about that or how they could work with you?
Yeah, everything's on my website at DONNA'S.com. My business is Business Harmony because I like to help business owners find harmony in their business and their life, because I know how complicated it can be trying to balance all of it. So I am in the process. I do have a 90-minute foundation consultation, and it covers a lot of the stuff, but it's more specific to you, and it's one-on-one so that you can answer any questions you have. We can go at a slower pace, explain something a little more in depth. There's a link to it on my website. I'm in the process of building an online signature program that covers all the different things that business owners need to know to build a firm foundation, because it's not just about sales and marketing. That's huge. But do you have all the other things in line, like your will and your estate set up to make sure everything's taken care of if anything happens? They all go hand in hand. Do you know who your avatar is? Have you worked through that and really defined your customer and your ideal customer? Are you balancing your life out? Are you taking time to do the things you enjoy and creating a lifestyle? You're creating your business around your lifestyle that you want versus your business creating a lifestyle for you. And I learned that the hard way. I worked crazy hours. I learned the hard way, and that's why we sold our business, so that we could have a life again. Because you learn by doing, and unfortunately we learned a lot of hard things the hard way. And so now we want to help other people to avoid those things and just really get that firm foundation and know what they're talking about. And we talk about insurance. Do you have the right coverage for your business? I mean, so many people, we had an incident with the beginning of tax season in 2021 that our office flooded because of busted pipes when we had the deep freeze in Texas. And I had to deal with all that in the middle of tax season, relocate, replace everything. But we had excellent insurance. And so I'm like a huge fan of having the right insurance after having gone through that. I don't know what we would have done if we didn't have the insurance. So, I mean, there's just so many parts of owning a business that people don't realize when they jump into owning a business. And that's my goal, is to educate people on that.
Yeah. And especially like the insurance side of things, real quick before we wrap up. So, when you're first getting started, you don't have money for very many things. And as a service-based business, you are going in and, it's not like you said, it's not like you have like a big brick and mortar building that could flood or,
Right.
these other things that could happen. And so, I have been teaching we have a release of liability waiver that the clients sign and that we sign and part of the contract. But I do, I am starting to see kind of making sure, even like you said, with your lifestyle, do you have homeowners insurance? Do you have car insurance? Do you have renters insurance? Do you have like your death certificate? Like, I don't know if you go into all of that, but you know what I'm saying? Like, insurance is definitely a very good thing to have. And at some point, there does come a time once you realize, okay, I do want to do this for a living. I do want to go legit with this. I want everything to be set up the way it needs to be set up. that, you know, I am a fan of making sure that you have some sort of something that is covering you just in case something happens.
Right.
And, you know, but right now, a lot of my girls are just so new that, you know, we're still building the website and we're still, you know, doing that kind of stuff. And so, you know, when you're first starting, you know, doing it, like we said earlier, getting your foundations good, doing it the best you can, the easiest and simplest way possible. But then from there, like understanding kind of like your thing of at the $50,000, that's a good time to start looking at, you know, kind of switching things up. Like there comes a certain point in your business and you'll know when it's time to start adding some of these other things, in my opinion. But, you know, trusting our gut and trusting what we know on the inside versus what everyone else is telling us sometimes is huge. And especially as a professional organizer, you know, I try to tell people, like, if you can, stick with one coach, like not, you know, not a coach like just me versus, or like you, because you're in a completely different lane, but one coach as in who's teaching you how to be a professional organizer or who's teaching you. Because if you get too many voices coming in at you about the same topic and teaching you too many different ways of doing something, before you know it, you're going to be burnt out from confusion. And you're just going to throw up your hands and say, forget this. This is too hard. When it really doesn't have to be that hard. It's actually very simple.
Exactly.
Yeah. And I love that you are helping women-based, you know, people do this. Again, if you guys want to reach out to her, and of course, all the links will be in the show notes below, but it is DONNA'S.com. And she also has that download. So go get that free download from her. And if you're interested in her 90-minute, you know, consultation where she can walk you through, then of course, set that up with her also. Thank you for listening. And Donna, thank you so much for being on the podcast and the channel.
Thank you so much for having me.
You have been listening to the Pro Organizers Coach podcast. Go to the show notes to find all of the links mentioned in this episode and hit that subscribe and automatic download button so you don't miss a single thing. Thanks for listening.